Hi guys, Piotr here, this is LiteFinance Global YouTube channel and it's my pleasure to be with you again. Today we are going to try to the easy answer, because there are many different answers. Easy answer, what is the market trend, what is the uptrend, what is the downtrend, and what about the market moving sideways. So without a further delay, let's jump straight into the video. Okay, let's try to do our job. So, market trend means the certain direction of the price movement over the particular period of the time, right? So, the price movement to the downside over the particular period of time, right? Market moved higher, market moved lower, right? And well, that's gonna depends also on some different factors we are going to discuss in a second, especially in the trend on the FX market. Usually I understand the price movement formed within the certain period of time with the clear direction and the strength. And the direction is the key characteristic of the trend, because even if we went higher here, right, then the strong move was to the downside. Well, overall, if we are talking about bullish trend, when prices moves up, they are represented by a series of sentences like this. We are moving higher, we have a pullback, but the low here is a higher than the previous low, followed by higher high, right? Followed by higher low, followed by higher high. So that's the uptrend. When we are talking about the downtrend, it's gonna be totally opposite, right? Market is going to the downside, making the lower highs and the lower lows. Lower highs, lower lows, right? But when market is finally doing the things like this, not followed but by higher high or lower low, when it comes to the uptrend or downtrend, then suddenly we might start to create the range. For some more advanced traders, it sometimes could be some megaphone formation, and that's the period of time when you have to recognize very, very quickly. Otherwise, especially if you are trading with bigger stops, that's what we are going to discuss in the second video, you might be under pressure. Time frame is very, very important when it comes to the trends. Why? Because it's good, and probably doesn't matter what kind of the trader you are. It's good to know where we are from the higher time frame perspective, long-term major trend, above 6 months, even to several years, right? So if you are, for example, trading based on the shorter time frame, like 4 hours, then for you it's good to know where we are from the higher time frame perspective, daily or weekly. Then we have intermediate. That's the definition is secondary trend. Usually means that it's correction of the main trend and could be up to 6 months. And short term, minor trend, right? That's especially good for you if you are a day trader, because if you know what is a short-term trend, if you know what's the intermediate long-term trend, then definitely, especially if you are a beginner, you should trade into the direction of the trend. All right. So it's good to have some knowledge about the fundamental analysis. Of course, especially if you are a day trader, you have to have good knowledge about the technical analysis and volume analysis could be useful as well. Who can influence the market direction, the market trends? Governments, international transactions, assumption, expectations, and of course supply and demand. Well, I've been recording the video about the entry, stop, and target, if I'm not mistaken, some times ago, not that far, but if you are going to check the channel, you are going to have full knowledge. So completely, we were discussing again higher highs, higher lows. That's the uptrend, right? Lower highs, lower lows, downtrend. If the market is starting to getting crazy, be careful. That could be the range period of the time. So that was the introduction to the market trend, and more to come. It was my pleasure to be with you. All the best. Do your own research, do your own homework as usual. See you around. Take care and goodbye.